tests. Again, another no supply. This is a lovely little study of a no supply test, and I've given another example of no supply test due to the usefulness. This is the most powerful form of testing as we get a setup. Now this study is not straightforward, which is why I've picked this specific chart. What do we know? First of all, we're in a downtrend with good selling, wide spreads. And then the market halts at A, where we see good volume, widespread, closing firm, deep, importantly, deep into the previous bar, way well above the 50% mark, probably in the 65%. So therefore we know that demand is present. We can't rally any further, we round over and boom, we spring here at B. Then C is the test of the strength, the spring via B. It's a down bar with lower volume than the previous two bars. And the good thing about this spring is that it's lower than the original anchor point at A. So if we don't take the trade at B, the test is a lovely entry. We would like the spread a little narrower. In an ideal world, we would like bar C spread to be narrower, around like this, in proportion to the spring. Here it covers a great deal. It has ease of movement as we're pushing down, hence probably why we come back to retest. At D here we get some reversal action. So after D we have this little bar, dips down, bobs up. That is also a test. But E is the perfect test. E is the no supply test that I like to trade and find invaluable in my trading. It's a very narrow bar with very low volume. In fact, it's the lowest volume for the whole day. And we have the lowest volume for the whole day with a narrow spread at support with strength behind us. This action hints at no supply. And it's testing for supply. It's testing this spring bar here for supply. And there isn't any, and we know that due to the volume and the spread. There's no selling pressure. Ergo, this would result in an instant buy on the close. Once you become familiar with no supply bars in the correct context, like here, you will buy these automatically right on the close. The stop will be under the lows of the recent price action, in this case D. That is our complete setup. Very powerful, wonderful little trades that occur very frequently in an intraday environment. This is the S&P on a 5-minute time frame. We can dig deeper for this chart for additional clarity. That's a very good form. Now this slide shows the diminishing volume. Ergo, supply in the market is drying up. This is a powerful tool that most traders will not recognize this subtlety. What am I seeing here? Down bar, down bar, down bar, down bar, down bar, down bar. All the down bars are decreasing in volume. Ergo, we know there's no supply in the market. And from here, what happens? We are unable to drive lower like we did here. This is a very subtle, powerful tell. This additional data of reading these individual bars or the supply bars within the market, and we can see volume decline, helps us to pull the trigger on this bar. However, we can go deeper still. There is another form of analysis. It's a variation of volume analysis. And this illustrates the transference between the buying and selling of good and poor quality. What do we notice? Well, we come down here, volume increases. Then we rally and volume decreases. So we'd still say that sellers are in control as we're driving down with increasing volume. But what do we note? On this drive up, we can see potential demand. How? Well, look at this action. We can see we're kind of clustering here. We're dipping down, pushing up, dipping down, pushing up, dipping down, pushing up, dipping down, pushing up. Ergo, we can see or feel that there is demand in this market. Even though volume declines and is not as strong as the selling, this hints, it's a subtle hint that there is potential buying in this market. Then C, as we react, volume declines and is much lower than the selling we had here, which was increasing. Now, isn't that interesting? Then from here, from D, we push up with increasing volume. So now the buying is better than the previous selling. So the selling is now negative and the buying is positive. So if we combine C and D, this is the transference. The selling is weaker and the buying is stronger. We can draw support from the lows and we have one. This is a shakeout. As we know from shakeouts, volume will be skewed as it frightens market participants, which is why from one, this price action here, or should I say the volume, is a bit sketchy. Why would that be? We discuss shakeouts in depth on our next subsection, but I will quickly go over this. One is a shakeout. It scares people out of their long positions from here, here, here. Those who have, or here, on the no supply test. And it also induces a bear trap, as we can see from the volume. So this A traps traders and B gets rid of weak longs. And people would be thinking there would be lower prices on the cards. Then all of a sudden, we push up, we halt, and we buy. Now, would you buy or sell around here after seeing one? It's very difficult to do so. So it frightens out the market. Hence, we push up. It's a little erratic in terms of volume. No clean reads, which is often the sign of a good shakeout. Why? Because it scares people out of the market. And then E, we get to resistance. We draw this across here. And what do we note? We get to resistance. What should happen at resistance? Supply should emerge. We react. Volume declines. Then as we break through, volume increases. Now, isn't this amazing how clean we can get the reads from using volume? So there's two types of volume analysis that we can use. We can see supply diminish from the market on this form of volume analysis. And we can also see the transference from the sellers to the buyers between C and D here. Then after the shakeout, which scares the market, we push up with obscure volume. Then as the market finds itself, how does it find itself? Well, at resistance, sellers should emerge, and they don't. Supply diminishes. Then we break with increasing volume. So when we add all the pieces of the puzzle together, we have a story of supply drying up and demand emerging. And when we get close to the market, analysing these individual bars, we have strength at support. We have springs and reversal, no supply bars and tests, which we can pull the trigger on and enter for trades. Think of it like this. These no supplies after the shakeout hint that higher prices are on the cards. It disconfirms the presence of selling. It will take time to analyse and understand this behaviour thoroughly. However, it is well worth the effort as we take trades right at the danger point with minimum risk. This is why it's of the utmost importance. And when I highlight this volume aberration like this, where we can read the volume diminishing, it's glaringly obvious. There's clear no supply. The pressure has eased off. Then when we combine it with this volume analysis and a little structure, these trades become incredibly powerful. This concludes our studies for tests. Let me quickly summarize what we've learned. Understanding the various types of testing provides different data. One being a setup, others indicate that higher prices are on the cards. It enables us to hold on to positions, or may on occasion provide a setup. Or if one is aggressive and we have a clean read, we can buy a test in a previous area of supply. Why? Because we are disconfirming supply in a previous area of supply. Therefore, we get the confirmation of demand and we may want to buy. Of course, this is discretionary, down to the individual, context dependent of structure, etc. So the three examples given should be understood thoroughly. The only way to truly understand this concept is to look for your own examples. It's one of the most difficult aspects to comprehend within this course. However, again, like most things, it is well worth the time and effort. Good. On to the next subsection.